Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the US dollar index for Tuesday, March the 30th, 2010. Well, a green-bodied candle today, and we had the market test this 81.4 level of support and resistance that we've highlighted over the last few months, and the market closed up above there. Not a terribly strong close. The bulls have closed in control. Because the market has closed between the midpoint level and the high. So that's telling us that the bulls have closed in control, but it's not terribly strong control. The bulls have also showed some moderate commitment to taking this market higher, and the the bulls did, however, lose some of the commitment that they had as they were trading the market around the highs, but certainly not a lot of commitment. It's certainly not a bearish type candle. We can see the strong shadow on the bottom of the body of the candle at the 81 level, where the buyers came in and bought the market back up to close it up above 81.4. The buyers are also keen, and that's because they've closed the market up above the previous close. And they've also made some net bullish progress on the day between the open and the close, and that's been a decent amount of progress compared to the previous day's trading. Having said that, though, we haven't had a change of trend. We've actually had a candle with an equal high but a lower low, and that it continues the trend to the downside. It hasn't actually changed the trend, but it is what we call a borderline outside day, and an outside day is a candle where we have, or a bar where we have a higher high but a lower low. This is borderline because we actually have an inside, we actually have an equal high with but a lower low. And that does raise some doubt about the ability of the market to continue to the downside, and also offers potential for a change of trend to the upside. So we do need to be aware of that. Now, the market is being attracted back to the flat Kijun-sen, and we know that when that Kijun-sen turns flat, it tends to be an attractor of price action. And that's what's happened over the previous three trading days, where we had this very large red-bodied candle, then a small doji type candle, but also today's candle. The market attempted to trade down to that region. It traded down to 81, and then the buyers came back in. So there is potential for that area to hold again as an area of support if the market does trade down around there. That's at 80.875, and also the Tenkan-sen is pointing flat. So in those two time frames, we really do have a neutral market, and the market is being attracted back towards that equilibrium. The market is finding that equilibrium in those time frames. Having said that, though, the market is still trading substantially above the cloud or the Kumo. So in the longer term time frame, the market still has a positive bias or a bullish bias. So we do need to remember that. Now, if we do see any strong bullishness and confirmation of a change of trend, there may be a possibility that the market will be heading higher and trade up through the resistance that's offered around the 82 region. So there is a strong possibility of that happening, although that 82 region will be a very important level for the market to have a substantially bullish close up above. If it does trade up above there, then there is some decent resistance up around the 82.86, but that is a fair way away. And there actually is quite a large zone of resistance up around that level. So important for this market is the high of the current candle with the potential for it to trade up to 82, but also down around the low at 81, and certainly around the Tenkan-sen and Kijun-sen for potential to trade down through this very solid support all the way down through to the cloud or Kumo.